Hey Team 101, in this video, this is the part 2 and the continuation of part 1 video. The link would be in the iCard or in the end screen or in the description. Do watch that. In the first part, I will be explaining the technical, and in this video, I will be explaining the fundamentals moving the gold for 20 till 26 June or the week ahead. And do consider subscribing. Okay, now coming on the bullish reasons why we are bullish for the gold is due to the fact that gold was up on Friday and we have seen a rising number of COVID-19 cases in China and in US, as well as rising US-China tension. US-China tensions. Beijing reported around 25 new COVID-19 cases on Thursday, with a number of cases linked to an outbreak in the Xingfedi market now standing to almost around 200. Some US states also reported a spike in the number of cases reported. Meanwhile, US President Trump also warned on Thursday that the cutting ties with China remained cutting ties with China remained a possibility a day after the State Secretary Mike met the Chinese top diplomats in Hawaii. The gold were up almost by 1735 with a gain of around 0.25%. With the investors turning to the yellow metals as in safe storage or as in safe haven of the value in political and financially uncertain times, as due to the US-China tension increasing, we can see uncertainty in the market, which will create the demand for the safe haven like gold. And moreover, the dollar rises to nearly 2 weeks high in the previous session muted the gold advance. We have seen the prices of gold closing some around 1743 till 1744. Now coming on why we should be bearish for the gold is due to the fact if we see any vaccine for COVID-19, thus this will lead to a risk on moon and the risk of moon or uncertainty in the market due to the COVID-19 would be decreased, as we now have a weapon or a cure in order to combat the COVID-19. Thus, any success in the clinical trials for COVID-19 or a new research being formed on the COVID-19, which will give us a positive news or a positive segment or a positive news, will increase the demand for stocks and other financial assets and would simultaneously would lead to a decrease in the demand of the safe haven. Decrease in the demand of safe haven, which is gold. Thus we can see a bearish move in the gold, and we are expecting a bearish move for the gold for the week ahead if the gold able to isn't able to break the key resistance as explained in my part 1. So do watch that in order to know whether we are bullish or bearish for the gold and what technical patterns tell us. Now moving on the economic calendars, moving the market for gold for the week ahead from 20 till 26 June is that on Monday, Tuesday, Wednesday and Friday we do not have any major economic calendar news coming out. But on Thursday we have major economic news coming out. The first news to come out on Thursday is GDP. Why traders care about GDP? Why traders care is due to the fact that it measures the annualized change in the inflation adjusted value for all goods and services and produced by the economy. It is broadest measure of economic activity and the primary indicator of economic health and health of economy. Thus, the usual effects are actual of greater than the forecast is bad for gold and lesser than forecast is good. The forecast number for the GDP is -5.5. Thus, lesser than numbers such as -4.0 or -3.0 or more lower number than -5.5 would indicate an improvement in the economic health. Thus, a sale position or a short position for the gold can be created for the short term. And however, if the numbers are greater than -5.0 such as -6.0 or -7.0, thus a long position can be created. Long position or a buy position can be created for the gold as the health of the economy is getting worsened, which indicates a depreciation in the price for dollar, thus creating uncertainty and vice versa, or inversely increasing the demand for safe haven such as gold. Now moving on the initial jobless claim. Now why traders care about it? Is due to the fact that it measures the number of individuals who filed for unemployment insurance for the first time during the past week. this is the earliest US economic data, but the market impact varies from week to week. A higher than expected reading would be taken as an bullish move for the gold. However, a lower than expected reading would be an bearish move for the gold. Now moving on the third data, which is core durable goods orders. It measures the change in the value, in the total value of new orders for long lasting manufacturing goods excluding transportation items, because aircraft orders are very volatile. The core numbers give a better gauge of ordering trend such. So the forecasted value for the core durable goods order is 2.1. Thus a higher number than 2.1, such as 2.2 or 2.3, or greater numbers such as 3.1 or 4.1 will trigger a sale position or a short position for gold. However, if the numbers are lesser than 2.1, such as 1.9 or 1.5 or more lesser, this will trigger a long position, long or a buy position for gold, in a short term period. If you like my analysis on economic calendar and the fundamentals moving the gold next week, so do consider subscribing, and do share, like and comment below, and do check the part 1 of the video if you haven't checked. The link would be in the iCard, description, or in the end screen. Thanks for watching.